But before we dive into all of that, the Oliver Wyman Forum and the NYSE partnered on the CEO Agenda 2025 survey, revealing how 165 CEOs of NYSE-listed companies are thinking about and responding to the challenges they're currently facing. Joining me now is Kreacic, Chief Operating Officer of the Oliver Wyman Forum. She's here with me at the desk. Anna, great to have you here.
Thank you so much for having me.
So we were previewing this survey here, but talk to me just to kick things off about the biggest surprises you saw from the results.
Well, one of the biggest things that surprised me and that I loved seeing is that CEOs continue to be singularly focused and doubling down on growth to drive shareholder value. That was by far the number one priority. I think, they're looking for things that move the needle quickly. So almost all of them are pursuing M&A aggressively. I know we're going to talk a little bit about that, especially for geographic expansion, but also other growth levers, right? Like revenue uplift, looking for new customers, organic investments. Two, what stood out is just the pace of AI progress seems to be really speeding up. We have 17% of CEOs who are saying that they've managed to drive or are driving 10% plus cost savings or revenue uplift across their enterprise. And that's huge, right? Like compared to anything that we've seen, if you think about impact. And then I think the last piece that really stood out is that a much larger percent of CEO time is going to short-term planning than ever. So CEOs right now are spending almost half of their time on planning of less than 1 year. And I think that's all about kind of acting fast and making bets with less than full conviction. So if I look at 2025, the message is control what you can, hedge for geopolitical risk that you can't control, and prepare for future opportunities, but stay ambitious.
Yeah, control what you can control, but
Absolutely.
Unfortunately, a lot of the challenges these CEOs are facing are things out of their control, especially as they relate to so much of the volatility and the uncertainty. So growth continues to be a key priority, and that was a holdover from the previous year, and even more so it looked like according to the numbers. And that's despite the fact that cost discipline continues to also be in focus. So it's not necessarily growth at any cost.
It's not growth at any cost. I mean, I think all CEOs, by far the majority, are singularly also focused on commercial discipline and cost discipline. With need something to unlock and fund that growth. So that's still showing up as a top priority. But I think with all the years, kind of post-COVID, with all the supply chain disruptions and shocks, all the geopolitical shocks, CEOs have a really strong muscle that they've built, right, which is all around resilience. And so I think they're preparing for what's next. And the other element of growth, right, is if you look at the last 80 years of market trends, value stocks beat growth stocks until about 2010, right? And now that's kind of flipped. So growth stocks are leading. So I think the fact that CEOs are prioritizing growth, and even more so as the chessboard is moving, is in some ways not surprising, but in other ways really exciting given what we hear day to day.
Well, you talk about the growth outperformance. A lot of that has to do with AI.
Yes.
So I want to dig into a bit more about that. I see nearly 1 in 6 CEOs are already realizing greater financial impact from their investments in AI. I'm curious, 1 in 6, are you surprised that number is not higher?
To be honest, I am not surprised that 1 in 6 are realizing, I'm not surprised it's not higher. I am surprised it's as high as it is for 10% plus cost savings or 10% plus revenue growth. Because if you think about that across the entire enterprise, that's massive, right? That's like really stepping away from the pack in terms of where they're heading. So, the sorts of things that we're seeing those quote unquote AI leaders that are stepping ahead do, they're twice as likely, 3 times actually as likely to be investing in M&A and to bring in new capabilities and kind of intellectual property. Actually, that's twice as likely. They're 3 times as likely to be focused on reinventing the business and fundamentally transforming the business. Because I think they realize the play right now is not going to be a small incremental play. It's going to take an entire business transformation to reap the benefits of AI, and they're going to have to do it with their people as well.
Going back to growth and this idea of growth through M&A, we entered this year with business leaders very optimistic about the new administration and what it could mean, a very pro-growth agenda, what it could mean for the IPO market, what it could mean for M&A deals. We haven't necessarily seen that play out yet, especially on the M&A front, but the expectation is that it's going to.
Yes, I mean, the survey was done from March and into April. I think this is, obviously with the new administration in place, with them fully understanding all the geopolitical shocks that are underway, and that is the plan. But also, I think you have to segment M&A deals, right? If you look at the bigger deals are still happening. So we have to look a little bit at the size of deal rather than just deal flow overall or value flow overall.
How are you seeing AI impact workforce? What is the future of work as it relates to the survey findings?
Yeah. I think over the last few years, we've seen a lot of talk about investments in technology and less talk about investments in people to move forward with that technology. And I think right now CEOs realize that getting value from AI depends as much on the people as it does on the technology. So 75% of CEOs see their workforce both as a short-term opportunity rather than a risk. And a huge number of CEOs are listing talent and culture among the top 3 drivers of long-term competitiveness, together with AI and financial strength. And I think that's music to employees' ears, to be honest, because we see CEOs saying they are going to invest actively to raise workforce skills right now. Mm-hmm. It's something employees have been asking for a few years now. And so I think that disconnect that might have existed over the last few years between leaders and employees in terms of the share of leaders that think their employees need retraining or versus the number of employees that think they actually need to be retrained, that gap was pretty wide, and I think that's going to narrow now, and I think that's wonderful.
Anna, really interesting insights. Thank you so much for sharing
some
of these survey results. That's Anna Kreacic, Chief Operating Officer of the Oliver Wyman Forum.